Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined today by Peter Barrett, the CEO of SMBC Aviation Capital. I should say, Peter, we're recording this 5 days before Christmas, so thanks for taking the time. Before we get into maybe the meat of the discussion, most of our watchers will know, do you want to tell us a little bit about SMBC Aviation Capital?
Sure. Hi, Joe, and thanks to you and Airline Economics for the opportunity. So SMBC Aviation Capital is one of the larger global aircraft leasing companies. We've got between owned, managed, and aircraft on order. We've about 700 plus airplanes. We have about 200 plus people based around the world, and over 100 airline and investor customers. So it's a big enterprise and a business that's, I think, performed well in what's been a challenging market over the last couple of years.
And Peter, obviously with that, that depth and breadth of what you would see across the market, how have you seen your customer performance evolve over the course of 2021?
I think generally, look, it continues to be a very challenging environment for airlines throughout the world. And I think we've seen that in the last couple of weeks with the advent of the Omicron variant and that, the uncertainty that put back into the market. But, generally, I'd say the customers, we've seen, the hard yards that customers put in terms of their cost base and managing their business really beginning to show some benefits over the course of 2021. We've also seen, incipient recovery, particularly markets that have strong, big domestic markets. So the US, Mexico, China, Russia, and increasingly over the course of the summer, Europe, which as we saw the vaccine passport really begin to work in Europe. So we've seen those markets beginning to, stabilize and get some level of recovery in terms of revenues. But it continues to be a challenging environment for our customers, but definitely one where I feel that, subject to, and, obviously it's still a very uncertain world we live in, but subject to those caveats, I think is one where there's definite stability and a bit of visibility, I think, for our customers. It is obviously very dependent on the market you're in, the type of airline you are. So I wouldn't say that it's a blanket response or a blanket view on my part that there's stability and recovery everywhere, but certainly in many markets. Unfortunately, some segments of the market, for example, long haul remains, I think, very challenging, and airlines that are dependent on long haul, remain in a very challenged position. And certain markets where they're continuing restructurings, particularly Southeast Asia, where I think generally the government response and indeed individual airline responses have been probably less sure-footed than some other markets. That continues to be some challenging. But even there, I think we're beginning to see some sense of these restructurings and I suppose rebuilding of airlines beginning to take some sort of shape. But it's hard yards, and while the recovery is real, it's going to take time. And I think 2022 will be another year of recovery for airlines, and I think it'll be well into 23, 24 before we see us really back to pre-pandemic levels of travel.
And on the opportunity side, you guys have still been incredibly active, right, nearly from the outset of COVID. When you've looked at that opportunity side, have there been things that opened up that have been different to a pre-COVID type environment? As you mentioned, like geographically kind of pocketed recoveries. But are you still looking at airline fundamentals, or are you putting more weight now as you look at geographies? Just as you're assessing new transactions, and you've done a lot of them, have those metrics changed in how you're coming at it?
Yeah, well, I think it has changed, okay? Because it's hard to believe it's nearly 2 years since we're into this now. So that's a lot of time, and a lot of things have changed. I think we were, as you correctly said, Joe, we're very active really from the get-go, kind of from the kind of May, June of 2020. Once we had really a sense of where things were going, we saw an opportunity to deploy capital. And and we were very selective where we deployed it. So it was almost exclusively new narrow-body, new technology aircraft. It was typically with good parties who had very defined strategies and strong, robust business models. And we also focused on particular geography. So, for example, we did a lot of business in North America, particularly in 2020 and into the early part of this year. And that was because that was an opportunistic position taken by us, because normally the US airlines are able to access the capital markets relatively easily. That was probably less so in 2020, and we were able to step into that breach, so to speak, and take advantage of that. So it's very much proportive. I think we're we're picking our fights, we're being selective. But there was a lot of opportunity, and we've done, I think it's over $4 billion of new business now since March 2020. I think we're probably, there's more competition and more capital coming back in, particularly I'd say in the last probably 6 months, probably since March of this year. And I think so, we're still swinging a lot, but probably not hitting as often as we were in 2020. But we still think there's some good opportunities to do selectively for good carriers, for good assets. And I think we're going to continue to see that. And with the I suppose the key thing is there's going to continue to be uncertainty and changes. We've seen Omicron, we've seen the potential for interest rate rises, and all of that brings the continuing some geopolitical challenges that continue around the world. And we think those circumstances will continue to give us pockets of opportunity for good deals over the next 12, 24 months. So there's a lot done, but I think there's more business to do as well.
Peter, that US example you've given probably speaks to the broader leasing environment at the moment, where we've clearly seen an uptick on the percentage of leased aircraft, broadly accepted. It's broken 50 now. How sustained do you see the pandemic giving rise to a step change in the percentage of leased aircraft? And do you think there's a ceiling on what that percentage could get to? 50 always seemed like the barrier. We're probably beyond it. Do you think we're going to stay beyond it? And how high do you think you can go?
Yeah, look, I mean, I've always felt that the long-term secular trend was going to be for leasing to become the dominant, and ironic we're using that phrase, the dominant tool for airlines to acquire aircraft, and for good strategic reasons, around managing their balance sheet, around fleet flexibility, around strategic development of their business. And I've always been of the view, and I've been quoted on this for many, many times over many years, that I look at the hotel industry as a not an unsimilar business model. Most hotels operators don't own the assets, don't own the buildings. They're focused on delivery of the service, delivery of the product, and the execution of that operating product. And I think that's the trend that's been ongoing in our industry for the last, really as long as I've been involved, for the last 30 plus years. I think that long-term secular trend is there. I think what COVID has done is it's accelerated. I think it's been a real step change in terms of acceleration. As you said, past probably that 50% point. I think that's going to continue. It may not continue at the pace of the last 2 years, but it's certainly going to continue at a pace. Is there a ceiling or a cap to that? I don't think there is, naturally. I mean, I don't necessarily think that you can say, well, 60% is the right number or 75% or whatever. I think it will continue and the market will find the right balance. But I do think it's going to continue to be the long-term trend that aircraft ownership and aircraft operation will be seen as separate things. And, people that are well able and understand the operation of airlines will be focused on that. And people that can really understand the ownership and the financial risk and have the financial heft to redeploy capital and scale, volume and cost, i.e. people like ourselves and the other big leasing companies will be the dominant owner of aircraft. And I think that's both an appropriate and natural phenomenon, so I don't think there's anything unexpected about it. And I think COVID has simply accelerated it. I think the other interesting thing around COVID is that I think it's also demonstrated to airlines that, in challenging markets, having a partner like a leasing company can actually be much more flexible than, for example, the bond market for an airline. Because as one of the CEOs or CFOs, excuse me, of a customer said to us, you can call up Peter Barrett or whomever and have a conversation. You can't really call up, your bondholders and say, have a conversation. It's just a different type of product. And it does provide that flexibility and I think a more appropriate flexibility for an airline, an industry like airlines that are subject to the very volatile markets that we've seen over the last 2 years.
Yeah, and we have seen that theme. I totally get it, right? That deepening of relationships and the importance of lessors and keeping the aviation ecosphere going, right? It can't be underplayed. You mentioned that point on capital and the increased amount of it you're seeing out there, particularly over the last 6 months or so, and you see it in kind of private equity and other people that are coming at the space. How have you found it from a pricing perspective? There's anecdotally, it seemed there was a bit of a bounce at the outset of COVID, a bit of a risk premium maybe on lease rate factors, but kind of regressed to maybe where we were pre-COVID. Is that fair, or how have you seen that evolve?
I think that's probably fair. I would think. I mean, there was immediate and I think substantive broadening of yield and terms, I suppose, in the lessors and the capital providers benefit immediately post-COVID. And I think that lasted for 12 months. I mean, I would say up to the spring of this year, there was a pretty good delta between pre and returns. And not just returns. I think the critical thing, I think people tend to perhaps miss this sometimes, is that it was the types of counterparties that you were doing business with. It was the types of aircraft that you were getting to do. It was the T's and C's on those aircraft. It's not just the headline, lease rate factor, which I think is an oversimplification of risk reward in our industry. I think, there's a lot of other things that actually come into play. And, so we did, a lot of business with super counterparties and wouldn't normally do a lot of, say, leaseback business. And we did a lot of it post-pandemic. So I think, certainly competition has increased over the last, I would say in the last 6 months. I think a lot of this is driven by the supply of money, and I think that's a huge factor here. And I think that's, as I alluded to earlier, I think the one of the things we're going to watch carefully over the next number of years is the change of the interest rate environment. I think that we passed that point of inflection in the interest rate cycle, and I think that's going to be an interesting journey for the world economy over the next couple of months and indeed couple of years. And I think that will have an impact on the types of yields you're seeing on assets, on aircraft assets as well.
Can I ask you your thoughts on that as a lessor? As you say, Fed are indicating probably 3 upticks next year. How do you feel when you see that interest rate environment that we're likely heading into an increasing? Well, what do you think that'll mean for your business?
Well, I think for our business, I mean, generally, I think as a general point, I think a level of inflation, not necessarily hyperinflation, but a level of inflation is good for aviation, for hard asset businesses like ours. I think for our business in particular, I mean, we obviously have access to a very wide range of interest rate products, and because we're part of a big FI, and that gives us a lot of flexibility. So we have always been very prudent in how we've managed interest rate risk in our business. I think that's our benefit over the last number of years, and it will particularly come into the fore now as you see a more volatile interest rate environment. I think our ability to protect margin and to manage that interest rate in our risk in our business will really be valuable in the next number of months and indeed years. So it's not something from our position that something I would be overly concerned about, because I think we're well equipped to manage it. I do think it'll present some challenges though for perhaps some other counterparties in the market, both leasing companies and airlines. So I think it's going to be the world we've existed in the last number of years, where there was a surfeit of money and it was very cheap. I wouldn't necessarily assume that will always be the case going forward, and I think that will provide challenges to some perhaps more marginal players, both airlines and leasing companies.
Can I bring you back to the bond market, but maybe more with respect to lessors and IG rated lessors, where we've seen, and if we assume interest rates will tick up, but let's assume, and that might have an impact on the ultimate rates. What we have seen, remarkably so since COVID hit, is the ability of large lessors to raise funds in the unsecured bond market at amazing rates, no more than yourselves, right, and what you've done over the last 6 or 7 months with your 2 bond raises. Do you just think that's here to stay? Is that just speaking to a market now that understands the leasing model? And if it can come, if you can winter this, you can summer anything, right? Do you think that there is a belief now that the large scale lessors will have the ability to tap that market on a go forward basis?
Yeah, I think broadly, yes, Joe. I mean, I do think there's an element of supply here. There's a lot of money in the world, so that I wouldn't I wouldn't confuse in a strong bull market. Sometimes everything all boats get lifted. But generally, I do think there's something substantive in what you say there, in that lessors, big IG lessors with scale, with breadth, with strong financial backers, with strong balance sheets, have proven to be very resilient over the last 18, 24 months. And I think that lesson's been well learned by the bond market. So I think, yeah, I mean, I do think there is an element of the strong and bigger will continue to benefit from that. I don't think you can extrapolate that to all leasing companies and all so non-IG and other leasing companies and other vehicles. But I think for the big kind of, let's call it the bulge bracket lessors, I think that is true. I think we are now much more mainstream. I think it's understood better. It's a broader investment market. broader investor market, excuse me. So I think broadly, yeah, I think your hypothesis is broadly correct. Yeah.
And you touched on it a little bit there, but do you end up then in the haves and have-nots? I'm an IG rated lessor, I can tap the unsecured. What if you're not, right? And that probably speaks a little bit to the more traditional aviation lending market. Maybe we'll touch on ABS in a second.
Yeah, no,
What that means.
Yeah, I think there is. I mean, have and have-nots is probably an unfair way to put it, but I think there will be people of scale, substance in terms of product offering and financial heft that will be able to play, I suppose, in terms of deals of big scale and volume and almost a wholesale retail type of market. I do think we need other lessors to trade aircraft with. I think you need other investors, and there's a whole ecosystem and life cycle of an aircraft. And I think that needs to be supported and developed. So, but I do think it'll be, horses for courses, and I think the kind of big wholesale lessors will become just that, bigger and more wholesale. I think that there'll be more niche lessors focused on particular products, or particular parts of the life cycle, or particular assets, or counterparties, or regions. So I think it's going to become more like a lot of markets. I suppose not unlike the accounting business. There are some big accounting businesses, but then in each market and each place around the world, there's lots of smaller ones who have a niche to fill. And I think that's going to be the case for aircraft leasing as well.
And one channel that's been important for large lessors like yourself that keep a very young fleet, the sell down piece was ABS. There was a lot of assets going in, like 10 billion of assets that went in near 19 in the market, then clearly shut after COVID. But it's come back very strongly this year. I know we're probably not back into tradable E-note territory, but you kind of sense we're going there soon-ish. What are your thoughts? Were you surprised at how quickly that ABS market came back? And how do you see that evolving? Again, it is quite important to that trading environment that we see it continue to grow.
Yeah, I'll be candid. I think it came back a bit more quickly than we might have thought. No, I do think you're right, and I think we've done ABS in the past as a trading tool. I mean, we don't need to use it as a funding tool because we have access to ample unsecured funding at very competitive rates. So we would see ABS as a trading tool, and we touch that market regularly and look at that market regularly and see, okay, what does it make sense for us? And we've traded a lot of airplanes to people who then put together portfolios and then issue ABSs themselves. So it's an important market. Yeah, I think it's recovered more quickly than we thought. I do think there's a little bit of road to go yet on the E-notes. I mean, I think there's a bit of a journey to go that, and yet, I mean, will we see E-note transactions in 22? I suspect we probably will. There'll be the exception rather than the rule, I would imagine. But I do think once we get into 23, 24, I think we will see more of that. So I think it's going to continue to be an important market. And again, I think it's important that it's a viable and liquid and vibrant market, because I think it provides liquidity. And I've always been of the view, and I've always said this for many, many years, that liquidity is in every dimension, be it the type of aircraft you have, the types of aircraft you can lease, or you can trade them. All the kind of things are really important. But the trading market isn't just in the ABS market only. I mean, we see strong bid at the moment on the trading side. I mean, we're getting attractive offers particularly for younger technology, a younger aircraft, both NEOs and CEOs and Maxes and NGs, which that are relatively young aircraft, narrow body aircraft. We see a good bid across the piece there, actually, not just ABS type of buyers, but just generally investors. Generally, there's a pretty strong bid for the types of aircraft that we own.
And yes, on that investor point, which is going to come to later on, but kind of makes sense now. Have you seen trends in capital that has entered or departed the space in the last 21 months? You're obviously very close to Japan, which has had a huge interest in aviation for decades. We've seen US private equity always be interested, and probably even more so now. But very curious in your thoughts, what you're seeing on that capital piece. Is it the same types of players that were there before, or have you seen any differences?
I think broadly it's the same types of players. It's not the same players per se, but it's the same types of players. So I mean, if you look at the Japanese investor market, which you touched on, is a very important market for us, and where we've got great depth and access, we are seeing repeat business there from customers who we've worked with in the past, investor customers. We're also seeing new customers, but they're the same type of customers. So their motivations, the types of businesses they are relatively similar. But I suppose they're looking at how their peers have done in this market, and they say, yeah, okay, that looks pretty interesting. And likewise in the US private equity markets, we're seeing some of the same people, but also seeing new names, but with a similar type of profile and objectives. So I think it's just, again, demonstrating the depth of those markets and the fact that aviation has become even more mainstream than it would have been, say, 5 or 10 years ago.
And maybe shifting gears slightly and talking maybe about our existential crisis beyond aviation, but obviously clearly important aviation is around climate change. We've been having these chats for years, and this, I'd say, has slowly moved up my agenda of questions reflective of the chat that we've had. As we come out of this crisis, it's clearly going to be hugely important. Can I ask you, as a lessor, is ESG and particularly climate change having an impact on your business now?
Yeah, I think the answer is yes. Okay, I think it's had an impact on our business for many years. I mean, we've it's always been something that we've thought about, and I think that the way we've demonstrated that, frankly, I think the thing that we've certainly focused on really since we started the business was having a young, fuel-efficient fleet, because we felt that was good for our customers, we felt it was good for the environment, and ultimately it was good for our business. And I think we've got, if not probably one of the youngest fleets in the world in terms of lessors, and that's a constant in our business to try and improve the quality of our fleet in terms of its both its fuel efficiency, its carbon footprint, and its utility to our customers. But I think ESG, you're absolutely right, Joe. I mean, it's been on the agenda on and off over as long as I've been doing this, but it's definitely at the top of the agenda now, I would say. And I think it's something that we as an industry, we really going to have to, and are putting real focus and effort on it. We launched our new, updated, and I believe comprehensive ESG strategy only last week. We put it up on our website and have spoken to a lot of our partners about it. We've been doing a lot of work on it in the last probably 18 months, I would say. And I think, it's aircraft leasing companies have a real role to play here, and I would see it on a number of different dimensions. Clearly, we can help. The most immediate thing we can do as an industry is help our customers renew their fleets and become more fuel efficient and less carbon impactful. I think we have a real role to do in supporting technology developments, but be that SAF, which I think is going to have a really critical role, potentially hydrogen, battery, other things in the future as well. But it's going to be that is a long road. But I think there is a role for us as capital providers to figure out how we can support the research and support the development and the creation of a financial infrastructure that's going to support that with those new technologies. And ultimately, then I also think we need to look at our own behaviors. I mean, we've been focusing a lot, for example, on our office, on the day-to-day small things that we can do in terms of our we need to travel for our business, but we want to travel smart, make sure that we minimize our carbon footprint, and also look at the use of carbon offsets, which is something I think we as an industry are going to need over the next 10 years because the types of technology change around SAF and hydrogen and electric are going to take decades to really come into meaningful type of use. And in the meantime, I think carbon offsets is the role. So look, it's a really important item for us. It's also interesting, and talking about living with it and it being real today, it's a really important item for our shareholders. I mean, it's one of the things they want to talk a lot about, and that's been for the last few years. I know our shareholders are very focused on this and how they can play their role. So, and we're seeing it as well from investors. So it's right across the piece, and I think it's rightly so. It's a priority for the industry, and will stay so for certainly as long as I'm going to be in this industry, I suspect.
And beyond, says you, and the element around, I totally get what you're coming from there, and the lessor piece is interesting, and how you feed into the overall messaging of all the good things that are happening. But if you go on, as you say, as a capital provider, do you foresee in the near term it impacting on your ability, on your ability to raise funds and actually costing you basis points if you haven't got that new tech aircraft that you're funding?
I think potentially yes. I mean, I think it's less of an issue for someone like us with a very young order book and actually a young portfolio and a significant order book that will refresh and regenerate that. But I do think it's going to become more of an issue over time. But I think as well, though, I think investors are probably going to be more binary. So I think they'll say this is an industry you want to be in or not in, as opposed to this is so they'll probably make it at a higher level in terms of aviation as a concept, as opposed to company X versus company Y. But in time, I think that will become a factor as well. But this is look, aviation like pretty much every industry in the world, has a carbon footprint that we need to address. Okay, but also aviation does a lot of positive things for the world. It's a huge economic driver. It is very committed to take that technology change. And if you look back over the last 30 years, aviation has made great strides in terms of improving its carbon footprint and decreasing the impact of individual flights. And so I think we need to strike a balance there in ensuring that we both recognize the work that we have to do with industry, but also recognize the benefits that aviation brings, not just economically, but socially, and in a whole bunch of different dimensions to the world. And we shouldn't lose sight of that either.
You mentioned your order book there, Peter, and we've spoken a little bit to the importance, increasing importance of the leasing channel. Do you think the pandemic will change the interaction between OEMs and lessors more broadly? How do you see that evolving?
Yeah, I think it probably will. I think it probably has. And that was probably a journey that was, again, a bit like the whole question of the leasing share. It's probably the pandemic has probably accelerated that. I think leasing companies have shown to be a very resilient partner for the manufacturers over the last couple of years. Now, obviously, the manufacturers have had their own problems, which have brought a whole different, and continue to have their challenges. But at a kind of a macro level, I do think leasing companies have yet again proven to be resilient or robust and good partners for the manufacturers. I don't believe that's been lost to the manufacturers, and I think they will recognize that going forward, probably while they probably won't sell the majority of their aircraft to leasing companies, because I think they will keep it in the kind of the 30% range as they have been for the last number of years. But I do think they recognize that most of the aircraft they build will end up being owned by leasing companies, and I think that certainly, and that's been a journey over the last, certainly in my career as CEO over the last 17, 18 years. I would say that when we started out in this journey, manufacturers didn't see leasing companies as customers. In fact, some of them probably saw them as disintermediaries, or somebody getting between the mouse and the cheese, as they perceived it. And that journey has changed a lot. That attitude has changed a lot, where I do think they see us as important parts of the ecosystem, and increasingly so. So yes, I think it has changed.
And that point, which you might have answered there, as you say, you've got a small number of very large lessors with order books. Sale and leaseback has been the predominant then channel that's bridged that gap. Do you see that continuing to be the way, or do you think more lessors would go down the order book route?
I think it'll continue to be the way. Okay, I think particularly some lessors who may have struggled over the last couple of years with smaller order books, and perhaps a less robust distribution channel, perhaps that don't have. I mean, we've relationships with hundreds of airlines around the world and a team right around the world. I think and that ability to move aircraft, manage the order book, step in where you need to step in, perhaps move aircraft out where you have to, for the customer and for the manufacturer. I think that capability, isn't in every leasing company, and I think certainly my sense is that perhaps some of the leasing companies that had smaller order books, or 5 or 10 or 15 aircraft there, whatever it was, are probably seeing that as being it's not a great way to acquire aircraft and to bring that up. So I think you'll see more concentration of orders in larger players. That'd be my expectation, and I think the manufacturers see the benefit of that as well.
And keeping with maybe the metal side, and knowing that the first answer is narrow body new tech, but the most investable aircraft that you're seeing, obviously you have a young fleet, you're focused that way. But are there things that surprise you where the market sits at the moment, looking maybe a little beyond narrow body new tech, as to what is looking like a very investable piece of metal?
Yeah, I suppose that there are, and I think obviously the P2F kind of stuff comes to mind in terms of some of the changes there. I think what you're generally seeing in terms of what's investable piece of metal, Joe, is you're seeing the margin. If you think aircraft have been a bit of a bell curve, and most of the airplanes are going to be in the sweet spot here, I think it's getting harder and harder on the edges. Okay, so the big airplanes we've seen, the 380s, they're stopped building the A380, 747. Generally big airplanes are becoming more challenging, and likewise at the smaller aircraft end, the smaller regional jets. So it's almost like the sweet spot has been narrowed and pushed in. So I think you're going to see that continuing over the next number of years, and that's going to continue then even in terms of an age dimension. I think they're the airplanes that are going to do better, are the ones that are in that zone in the middle, because that's where they have the most utility, and that's where flexibility and ultimately operating efficiency is going to be there for the airlines in all markets. I think that's probably the lesson that airlines have learned particularly hardly in very hard terms in the last couple of years.
You touched on P2F there, cargo. We look at something then. Do you think there has been a real step change, a sustainable step change in that area around e-commerce? And do you think it's a wider opportunity for aviation finance and looking at the cargo space?
Potentially, Joe. I mean, I do think there's an element that it is a bit early to call it, because there's a lot of belly cargo that just isn't flying at the moment, both in terms of airplanes just not flying or not flying as with as much efficiency, which is much regularity. And there's huge amounts of cargo capacity that's been taken out and isn't going to come back until we get back to full volumes. So I think that could be a little bit of a distortion in the cargo market. But I do think, to be fair, I do think there is a long-term, again, sector trend around e-commerce, and that people are consumers are behaving in a different way, and that will have a benefit for air cargo over time.
Just in closing, Peter, which I normally like to do at the end of these, and we're coming up towards the end of the year, tons of uncertainty out there, but what are your optimism levels as you look out into 22 after I can't believe it's been 22 months, it feels like it's been about 22 years, but how optimistic are you looking out into next year?
I would be cautiously optimistic. I mean, there's a couple of things I would say. First of all, I think one of the things I take the most comfort from, or the most confidence from, optimism from, is it is really clear that when people can travel, they will travel. I mean, the demand, the interest, the desire of people around the world for business, for leisure, for visiting family and friends. Once you open the market up, once you reduce the restrictions, people will travel, and there's a real demand there. So I think we should be confident as an industry that the demand and interest, and it's subject to lots of different things, and we need to do it in a way that's going to be better for the environment and all those things. But there is a real demand there for air travel, which ultimately kind of underpins my confidence. The second thing is, I think, if you think about it, Joe, when we were having this conversation this time last year, there were no approved vaccines. Nobody, maybe they just literally were approved. Nobody had been vaccinated, and billions upon billions of people have been vaccinated now. Now, the equality of those vaccinations around the world, I think, is something the world needs to address. And we've seen that with the advent of Omicron, that the world will be safer if we can get more vaccines to more people. And we've been involved in that. We've supported COVAX in the year with the Aviation partnership for vaccination. But I do think that I get great confidence from the ability of the scientists and the engineers, the women and men around the world who've been developing this, the new antiviral drugs. Humans are hugely innovative, and we've found ways to manage it over the last 12 months, and I've no doubt that we will continue to find better ways to manage it over the next 12 months. That gives me confidence as well. And also, I think that the pandemic, it will end. It's taken longer than we all might have liked or expected, but it will end. And as I said, I think air travel and demand and the economic activity that is part of our industry will continue. So I would be optimistic. It's not going to be easy. I'm very confident in our own business because we have a very strong financial position. We have a very good portfolio. We have a great team of people, very supportive shareholders. So I'm confident that whatever comes, we will be able to weather it. And indeed, whatever comes, we will take advantage of the opportunity that it will bring. But ultimately, in the longer term, over the next couple of years, I have every confidence that aviation will fully recover.
Peter, as always, I'd like to thank you for your time and insights on behalf of KPMG and Airline Economics. Wishing you and SMBC a very successful 2022. Thanks again.
Thanks, Joe, and likewise, Steve. Thanks for taking the time, and best of luck in 22.